All right, trade pros. Welcome one, welcome all. YouTube is telling me I am live. I'm just waiting for it to show up here on my end as well. And we can go ahead and get started. That shows it's streaming. All right, cool. So we are actually live, which is great. Let's get out of here and let's jump onto this page. Actually, let's go back. All right. Are we still live here? I'm not sure if that just disconnected it. No, we are still live. All right, perfect. Health is good. Let's get going here, guys. So, welcome everybody here to today's midday update. It is August the 29th, 2019. What's going on, Chris? It is, yes, the 29th. We have got one more day of August trading left before the Labor Day weekend. And ideally, regularly, this is the time. What's going on, Francisco? It's good to see you in here as well. This is the time that we generally look forward to as the end of summer trading. The Labor Day weekend, the first Tuesday after the Labor Day weekend, rather, is when we start typically seeing a pickup in volatility that lasts generally into December. And again, a little bit of a slow time around December or January for around 2 weeks or so. And then after that, we pick it up again into late May. So that being said, we are looking forward to the increased volatility coming back in. It's been a little bit tougher for some of our traders here. Myself in particular, I've been struggling a little bit over the last week or two, but that's okay. We'll bounce back once that volatility comes back in. So on today's session, let's take a look over the drivers throughout the U.S. session. Georgie mentioned the major overnight driver came in the came with regards to China confirming contact with U.S. officials on trade and discussing upcoming September talks. And this kind of increased the risk appetite for the equity markets. And, we did have a bit of a dump this morning around 10:30 or so on the back of the ECB news, which was that the ECB President nominee Lagarde mentioned that the ECB has not hit the lower bound on interest rates. ECB has a broad toolkit and must be ready to act. Written responses to EU Parliament. And then we also had ECB's Not out of Netherlands mention that they do not see need to resume QE program right now. Market expectations for ECB September decisions are now overdone. All right, so a bit of a sell-off on the equity markets on the back of that comment. And we did break the VWAP on the SPOOs, however, reclaimed it really quickly, just as quickly as we broke it. And we are now pressing to session highs right around these 29, 25s or so. This is coming at a pretty interesting level. We're coming at a really interesting level on both crude and on S&P 500 at this moment in time. And I'll show you that in a second. Let's just cover some of the drivers from the U.S. session. So outside of the ECB's squawks, we also did have President Trump tweeting that he reiterates China wants to make a deal. It sort of has to make one. Trump's naturally going to say stuff like that. We also had the big high impact numbers out of the U.S., the preliminary GDP numbers. We had the GDP price index came in at expected 2.4%. Core PCE Q over Q figures came in just a little bit behind expectations. 1.8 was your expected value. 1.7 is what came in. And then the preliminary GDP annualized quarter over quarter came in at expected at 2%. And personal consumption beat at 4.7 versus 4.3% expected. We also did have pending home sales. The month-over-month figures came in at around 10 a.m. And this was a big miss, minus 2.5 versus 0 expected. Year over year came in a little bit less than expected, 1.7 versus 1.8. And this was the largest month-over-month decline since January 2018. And we also had some weekly EIA natural gas inventories came in with a little bit more of a draw than anticipated. Expectations were 55 to 57 billion cubic feet, and what came in was plus 60. All right, so that's what we got on that front. As far as what is left on the agenda today, nothing really out of the States. Our next high impact event out of the States comes in tomorrow morning at 8:30 a.m. when we see personal spending month over month figures on top of the core PCE price index and the Chicago PMI numbers. All right. Hello, George. Just so I didn't say anything here. And that's where we're at right now. All right. So let's switch off of me and onto the charts. So let me get that guy off and pop that one on. And I should see that change on YouTube here shortly. And shortly. So there is a bit of a delay here between what I'm seeing and what you guys are seeing. So I just want to make sure that I am speaking on the points that you guys can see before it goes. So I'm just watching myself here on YouTube. And once I see the charts show up, we can go ahead. All right, there's the charts. Cool. So on the quote board, what you guys are seeing right down in here, S&P 500, 986,000 contracts on today's session. Slowly starting to pick up coming into the Labor Day weekend. During summer, it was pretty rough. We had around 375 to around 450K volume at this point of the day, which was obviously a lot less than we have now. So definitely picking up into this Labor Day weekend, and that's really nice to see. Good numbers here, pretty good volatility, or rather good volume, and we are up 1.23% on the session today, and our previous day close came in at the 28.83 quarters. We are currently at the 29.25 halves, and we're up 1.24% from there. On crude oil, another nice market we like to follow. Coming into our average volume here around 455, a little bit less than average. Average has been around 500 to 550 when it's moving. We're around 455, so not that far off. And it's been a bit of a choppier session. It's been a bit of a slow grind here in crude, but at the end of the day, we are above our previous day close, which was 55.93. Last traded price was 56.69. So we are up just over 1.5% on crude for this session. All right, so volume's looking pretty okay on both of these markets. Let's take a look at the pivot charts here to see what the sentiment is looking like. All right, so here's crude on your left-hand side. Right here, these are the 1 hour bars. And what we are seeing, we had a nice pull off of these highs yesterday, and today we are retesting that R1. This is a level where we could potentially see some aggressive selling come in if the buyers do fail to get this thing back above that that R1. Your R1 is 56.80. All right, guys. So 56.80 is right around this previous day high, which was the 75. So between these two, you guys can see already, even though it's been relatively bullish so far this morning off of the pit sold off into the VWAP, bounced up to a new high, another dip down, another higher low, and a break to fresh highs, another dip, another higher low, break to fresh highs. So really until this thing happens, or rather until this thing breaks that structure, buying is the right thing to do. So at this point, yeah, we did come into the previous day high. We are seeing a little bit of failure. So the way that I'd kind of be watching this is what happens here at the 56.80s, 56.75s now that we have broken below it. Do these bulls get aggressive? Do we see one of these where we just get the pullback, a couple of rotations, and then a move to fresh highs? Or does it come back in, hold these rotations, and then dump off into the pit VWAPs, back into this 5-day point of control for another move back up? All right, so that's kind of what I'd be watching for. At this point, I'd be a little bit cautious if you're looking to get long up here simply because we are right at resistance. So even though what it has been doing is pulling back, rotating, and breaking out, that's great. But when that happens around resistance, the likelihood of it continuing doing that is a little bit less likely. What tends to happen is around resistance, you'll often get a little bit of a consolidation and then another press down before you get that support that drives it up. All right, so that's ultimately what we're watching for. If you prefer to fade, the fade is up in the previous day highs around here. You guys are seeing already one rotation up, one rotation down. There is some sort of rotations happening. So once it gets back up here, you could look to potentially fade it back down for a move to the overnight high. This pit VWAP and this 5-day point of control right around these 56.30s, 56.34s. All right, that's what we're looking for on crude. I'd be looking to pick it up for another long right around there, right? Just looking for a move back into these 56.70s, because what will happen here is if it is ready to go, right? If it is ready to go, we're going to make a break for those highs, but you never know that, right? You never know that. What you want to do is you want to target a level that it should come back into as your primary target. So if we get back down into this level here, I can still see us retesting that level, but whether it breaks from here or continues lower, that's to be determined. And you don't know that when you get long in here, right? So the way that I'd be looking at this is if I'd be getting long in here, look to take some out there. And if you're holding more than one contract, then you can get paid into here, hold the other one for a potential breakout. If not, this is where I can see us potentially rotating into, creating a lower high, and then breaking back below these structures here, and then starting the downside back again. All right, so that's what I'd be watching here on crude. On S&P 500, you know, kind of a similar situation. We have been pretty bullish today. There's no doubt, and there's no two ways about that. Sellers have been getting absorbed the whole time. Really, aside from that move, every single bit of selling has been just absorbed, and the buyers have been coming out strong. And that's quite indicative of the way that it has been going. You know, pivots are showing kind of the same. We are above pivot, above R1, above R2 right now. And what you're seeing is each time it's breaking these levels, you're getting a pretty deep, aggressive pullback, but the buyers are holding that and pressing it back above fresh highs. You see that again with R2, broke to fresh highs, big deep pullback. Now we're back at fresh highs. All right, so upside is the right side. With these SPOOs on the daily chart, all right, on the daily chart, the 2940s are a big level. Let's see if I can pull that up for you guys. The daily chart is a big level simply because there's rather a big daily structure around that level. And let's see if I can pull it up for you guys right here. S&P 500, and here it is. Right, so this is what the daily chart, or rather this is what the daily chart looks like here of these SPOOs. All right, and this is the reason why I like those 2940s, because you guys can see that big sell-off happen. We had one rotation up into here, sold off, another one, aggressive sell-off, a third time, aggressive sell-off. So there's obviously sellers defending that 2940 level. If we get back above that level, those buy stops are going to go, and we'll likely make a press back above to 3,000. If not, if we get back up into this level and the sellers do defend this again, you guys are seeing a pretty nice range between these 2940s and these 2820s. All right, so if we fail back in here with a nice wick on the daily time frame, you'll likely get a pullback at least to the middle, somewhere in the middle of this range, maybe back to the bottom. All right, so that's ultimately what we're watching for, and that's why despite us being up here, I'm still thinking we're going to make a press back into those R3s, right? And so the only thing about getting long at this point in time is that we are right at previous highs, and you know, we do not like to buy previous highs, or we don't like to get long at highs. We like to wait for the pullback. So you guys are seeing here that we are testing it. It is getting a couple rotations on this 10 tick. You can see from about 10, or let's call it 11 a.m., you know, 10:48. From there, from around these 2910s to these 2925s, no single black candle in here. There wasn't a single pullback in this move. And the fact that there was no single pullback, you know, if this was the case where we saw a pullback, then a continuation higher, maybe that'd be more interesting to us. But the fact that there was no pullback and we're at previous highs and we are consolidating, this just has the feel to me of trying to break out here, failing to break out, rotating back down, and then getting that real move up. At this point, you know, anybody that's been buying up here, they're making money, right? So they're not worried. The first sign of somebody selling, if it gets back below this opening range low, that's when you're likely going to get a bit of a pullback, and that'll be your opportunity to potentially get long. That would come in around your open, which on this chart is showing me the 17 quarters. On the footprint chart, it's around 16 quarters. So anywhere in this little level here is ultimately what I'm watching for. Again, not looking to buy it up here. I'm more anticipating a fake breakout of that level, a bit of a deeper pullback, and then the real move. And you guys can see there's a bunch of offers sitting up here around these 30s or so. And that looks like the target. Above that, you know, 40s is our big level. That's where we're really anticipating this market to end up by the end of this week. All right. So not looking to buy here. I mean, you can do it if you want. It's your own money. But for us, the higher probability is for a fake breakout here, rotate back down, get some new longs coming back in, and then press this sucker back into fresh highs. All right, so that's what we got on that front. That's what we've got on crude oil. That is what we have on the S&P 500. And let me switch over to my TradePro Performance Index here, guys. Show you guys how our team did. And here we are. All right, so here is how the team did. I told you guys yesterday, trade pros tend to bounce back after we have overwhelmingly sucky days, if you will. You know, those sucky days do happen. Yeah, yesterday was one of those days, and you can see last time we had one of those days, nice bounce back from the team. We had another poopy day yesterday, 44.23%, and the trade pros bounced back to 65%, which has honestly been around the average on a monthly basis. It's been, you know, between 65 to 70% of our traders that are trading live capital are, you know, finishing up or flat for the session, all right, throughout the month. So good indication of how the community is doing. And to lead in on that, couple of announcements to make. There's about 20 of you watching right now. So if you are not already part of the TradePro community, what we are doing is we will be opening up our trading room to you guys for Thursday, September the 5th from 9 a.m. till around 11:30 a.m. Eastern Time. So we will be adding the link below this video. Below this video in a little bit. I just got to create the actual stream for that, but that's what's going to be happening. So if you guys have been on the fence, or if you've been following us for a while and haven't really had a chance to pull the trigger yet, or you've kind of been on the fence not knowing if you should jump in or not, this free one-day pass is going to show you what the room is all about, and you can make that decision for yourself, having seen a sneak peek behind the scenes. All right, so that is basically going to be it for today's update. Hope you guys enjoy this one. Not as long as the other ones, but you guys are being pretty quiet. George, we initially thought about it for Wednesday, but because of the Labor Day weekend, the crude oil report is getting pushed off to Thursday. So we're going to be opening it up on Thursday so you guys can see how we trade you know, the equity markets and how we also trade the news events. All right, so you guys get to see kind of best of both worlds. All right. George, yeah, so that was George gone for. How can we enter? We have to create an account. No, you won't need to create an account. I just have to set up the file for it on YouTube. YouTube's changed around the way that it does things. Normally we were able to do it through our Zoom meetings, but YouTube's made some updates to their platform, and we can no longer do that. So we will have to we'll have to do it on an alternative way, and I just got to figure out that way, and I'll have the link posted onto the description of this video once I get that up for you guys. There might be actually, no, there's no link up there now, but I will get that link up there, and yeah, that's going to be it. And we'll continue to mention this tomorrow as well. So If we don't get that up there tonight, we'll have it up on tomorrow's video as well. But it's going to be basically a page that you go to. You're just going to have to submit your name and your email address, so that you get the link sent to you that morning of the 5th around 8 a.m. You'll get the link for the room, and then you click on the link and you'll be able to get into the room and see what we are all about. All right, guys, so I'm not seeing any other questions. I hope I answered everybody here. Until tomorrow, guys, if you will be trading the remainder of the session, you know the 3 rules: remain patient, remain diligent, and remain disciplined. We are expecting the summer volatility to die out, and we're expecting the nice regular volume and volatility to come back in as of Tuesday. So really looking forward to that, and you guys will see. Hopefully we'll get a nice day on Thursday. Yeah, no problem, Francisco. Hopefully we get a nice day on Thursday for the YouTube community to see what we're all about as well. All right, guys, so that's going to be me for today. Until tomorrow, good luck and good trading. Just before I sign off, it looks like crude is retesting those previous day highs as mentioned, guys. So watch for that level to hold as resistance if we are going to make a sell-off down into those 5630s. And S&P 500, the 10 tick has not yet closed, but the way that it's looking is pretty much what we were just saying. It did breach above the previous highs. If it closes back down around its structure lows here, around these, let me get this thing in here, around these 28.75. So if we close below these 28.75, that's likely going to be the fake breakout, and then we'll likely see sell stops back down into around the overnight high to the open, and we'll go from there. All right, cool. All right, guys, so take care, and until tomorrow, good luck and good trading. Ciao.